Hey everybody, this is Mark Coe with CommoditiesGuy.com. I just want to welcome you to the recap for the week of August 24th, 2015. Very wild and volatile week in the markets. And I wanted to go over crude oil performance from the EOD service, the U.S. Open. So again, this newsletter comes out at about 7:30 a.m. Eastern Time every morning. So what I wanted to show you here is, again, crude oil and how we're framing our day. So you'll see the key component of everything we're doing here is we're framing the day, how are we expecting things to trade, and how do we act at levels that we're expecting. So what you'll see in white is this is how I'm framing my day. Green levels you'll see are support levels, and red is resistance levels. Let me actually go ahead and put a couple resistance levels just so you can get a frame of reference. 3905. Apologize, this is the one I didn't have on there. So this is a resistance level. So these are all levels are given very early in the morning and are able to then deal on. So let's just take a look. This is August 24th. So what we have on August 24th, and I'll just give you a quick look at what we're looking at here. This is your U.S. Open newsletter, crude oil. As I walk in and prepare the newsletter, we're trading down 3.73% as we approach the U.S. Open. I'm using 38.55 to 39.90 to frame my morning. I do not have a bias on this Monday morning for positioning, but I do provide the support levels, 38.70, 38.30, and 37.70. Resistance levels 39.05, 39.40, and 39.90. So I just wanted to give you a frame of reference of where this is all coming from. So again, the white is framing the day. So this is how I'm expecting the day to trade, to be able to trade within that level. Here are my support levels. Again, 38.30, 37.70. Resistance levels 39.05, 39.40. Actually, let me just put that last one up there so you can see 39.40. So there's your resistance. So one thing you'll notice right off the bat is how we're trading within these levels. So what I always like to look at is, okay, so I've done this work. How do I trade within these levels? First off, first time we're hitting resistance levels, what do we notice? The inability for price to actually sustain movement above it. So it tells me it's a good level I want to look at. Again, the biggest thing here is watch how we're trading level to level to level to level, and it's always the reaction to the level that tells me how I'm going to deal. Certain days you're going to have a bias. The bias may be to buy dips to one of your levels. Other days you're just going to treat it as your roadmap, and that's how I always like to look at the EOD service, is the roadmap. So let's watch how this one trades. So right off the bat, we trade to 39.30. We trade just above it and are unable to make any further gains, and then immediate sell-off down to what? Where we're framing bottom edge of that day, 38.55. Get a reaction off of 38.55. So we're literally trading level to level. Now again, we fail to take out the 39.40 resistance with any, 39.05 resistance with any real clarity. We're going to come down and test what? Support level. We test support at 38.30, small reaction, back to what? To where we're framing the day. This is where you get a flush move at 9:30. This is the U.S. Open. This is the morning the Dow opens down 1,000 points. So there's just craziness in the market. So you look at where we're framing the day and where does this information come in? Well, you have this information at about 7:30 a.m. So while crude oil is trading 39 evens, you're able to mark your support level at 37.70, and crude trades down 5 cents above that 37.70 level. So while so many retail traders are freaking out and don't really understand what to do in the market, you have your entire day framed. You don't know how it's going to trade at every level. You're watching the reaction and reacting to those levels, but you have your levels in front of you. So this one, it couldn't have traded more beautifully if it tried, right? I'm never going to walk in and say, I know that at 39.05 it's going to go lower. I don't know that. Nobody knows that. But what I do know is that's the level I'm looking to be able to deal on. I know at 37.70 I'll be looking. I know at 38.30 I'll be looking. So it's the reaction at those levels. So again, this is just a really good example of a day where, again, framing your day and being able to deal on that. So if you're an intraday trader, these levels are golden for you to be able to deal. And you can see how they're trading within that. Level to level to level to level to level to level to level, and so forth. So now let's get on to Tuesday, the good stuff, where we actually have buy biases here walking into the U.S. morning. So this is what we're referencing, the newsletter that comes out early morning. Crude oil, I'm using 38.85. I'm biased. I'm buying dips to 39.10 and 38.90. So if you think about how everybody, longer term is telling you crude oil is going lower, it's going lower, we're actually buying the dips. And again, this is for short term. It's intraday. This is not my long-term analysis. This is intraday analysis. So for any shorter-term traders, these levels are phenomenal. Again, the white, this is how we're framing the day. This is how I'm expecting the day to trade. 38.85, which I have marked down here in white, to 40.50. And you can see we never once test the top end of this range. But this green, this is where I'm biased to buy to get position long trade. So it's 39.10 and 38.90. And the 38.90 green's not going to come in just because the white is dominating the color scheme here. So let's look at what happens at 10 a.m. Again, these levels come out or published at about 7:30. So over here, they're published. The first shot you have to deal long side is at about 10:15. And what happens at 39.10? You trade 5 cents below it. You trade to a low of 39.05 at 10:30, and then you rally 54 cents, almost 60 cents. 54 cents off your buy level, but almost a 60-cent rally off the low. So again, watch how the level works. Your buy side at 39.10 and you rally to 39.64. And the one thing you'll notice is that you don't come in and challenge this prior swing high, this level here. So in my trading and in short-term intraday, if I fail to rotate to the last top edge, I want to get better prices before I'll deal again. So the next time we come down to 39.10, I'm not as interested. I'm waiting for this 38.90 level, which again, watch what we do at 38.90. We trade all of 4 cents below it, 38.86, and then we rally above 39.40. So another 50 plus cent reaction off of that level. So you have these levels at 7:30 a.m., 3 hours in advance. This is 5 hours, 6 hours in advance. They're on your screen. It's not as if you're needing to make the decision in a matter of 10 seconds. You know where you're willing to deal, all because you framed your day in the beginning of the morning, so you know how you're looking to deal. So again, two beautiful intraday reactions of better than 50 cents in a market that really didn't do much that day. I mean, crude traded pretty much less than $1, and you have two high percentage moves with 50 plus cent reactions to end the day. Wednesday is another day that comes in where I don't have a bias. It's inventory data. So we know on 10:30 on Wednesday mornings we're going to get U.S. oil inventory data. So typically the way I'll do it is draw the frame the day, and then I will deal with it after we get the inventory data. And here you can see the inventory move right here. So it's just silly to come in with an overall bias if you're not certain how the news is going to be reacted to. But what you will notice is the framing of the day. Look how the framing of the day works. So I framed the day on Wednesday with 39.85 as the high. We ticked olive to one tick higher. We traded 39.86. So we got the frame of the day within 1 penny. The low side we were using 38.90. And so look how price reacted at 38.90. On inventory data, you got to move below it, but I'm real big on the closes. How does price close within it? So at 7 o'clock, 7:30 on Wednesday morning, this is how you're framing your day. And look how price trades within your frame. So intraday traders, knowing that you have your day framed, what do you want to be looking to do at top edge? What's a reaction to? Failure to extend through it, you're seller. At the bottom side, what do you want to do? Be buying bottom edge of that frame. Anyway, that's Wednesday morning. Again, no bias on that day, but a beautiful result for how we framed our day. So now let's take us into Thursday morning, where again we do have a bias on Thursday morning. The bias is to get long side. So think about how many analysts, how many people, how many I would call them non-traders myself, are actually telling you what the market's going to do, and it's all lower. Not a lot of people are telling you to buy this market, but we were. We were looking buy side this market again for the second time this week. So this is how we're framing the day, August 27th. framing the day 39.55, which you'll see on the bottom here, to 40.70 up on top. This is the buy zone highlighted in green. So on August 27th, bias to buy dips to 39.80 and 39.60. The 39.60 is this level right highlighted in white. So 39.80, we know it walking in at 7:30 in the morning, we want to buy 39.80. Where does this dip take us? 7:45. 39.80 to the tick. So you don't sit one tick out of the money on this buy, and all you do is trade higher. If you didn't get that one, again at 9:15 in the morning, so almost 2 hours later, if you didn't get that one, you trade to 39.81. So you know you're a buyer to 39.80. Anything right on top of that, you're buying it, and all you do is trade higher. Again, what is the reaction at your resistance level? You don't stop at resistance. You don't tick to it and come off. You absolutely rip through your resistance level, which now you can use as support. So you know you want to be buy side. You know you were a buyer at 39.80. You know price absolutely destroyed the top resistance level. Again, look at the difference of reaction on Wednesday's resistance level, where it traded to it, came off. And look at the reaction here. Didn't even pause at your resistance level. So you're long coming into it. So I don't care whether you're taking profit. You know you're biased long in the day, so you're not selling crude. I don't care whether you take profit, hold on, see if it gets through. Lots of traders are going to have lots of different approaches. But once you get through, especially with that strength, you know you're buying dips. And this one actually taps back just shy of your 40.70, about a dime shy of that, to let you have another opportunity to get buy side, all for a continuation. And this is all, short squeeze and really good movement as the stocks are rallying. So it was a phenomenal week in crude oil. But nonetheless, we were right there at the best levels of the morning on Thursday to be buyers. Takes us into Friday. Again, Friday, no bias on Friday, but we have our levels marked. And again, this is how we're framing our day. So this is Friday morning, August 28th, the end of a pretty crazy week in stocks, late summer. What are we doing? We're framing the morning, 41.60. Right here, you can see it. Again, this comes out about 7:30. We're framing our morning, so this level's here. Where do we trade to? We literally trade right to it. Here's our support level in green. Here's our resistance level in red, resistance number 2, and top edge of frame. So that's what we're looking at. White is our framing the day. How are we reacting at support levels? We're bouncing off support levels. How are we reacting at resistance levels? We're ripping through them. We're not even pausing at resistance levels. We're trading through them, holding them, trading through them. So you know from reaction to how you want to get positioned. All your supports are bouncing off immediately. All your resistance are getting torn through. How do you want to be trading? You want to be looking buy side. So again, a beautiful week. Look forward to another good one this coming week. Check us out, commoditiesguy.com. This is the U.S. Open preview. This is just crude oil, just one of the markets we cover. And hope everybody has a great week, and look forward to talking to you again soon. Thanks.